To build anything that truly lasts, it takes time.
But shifting focus now to India's gems and jewellery sector. India and the UK recently inked a historic free trade agreement, marking a key milestone in strengthening economic ties between the two nations. But one sector that stands to gain significantly from this deal is India's gems and jewellery industry. In 2024 alone, India exported gems and jewellery worth nearly $940 million to the UK, while imports from UK stood at $2.7 billion, taking the total bilateral trade in this space to about 3.6 billion US dollars. And now, under the revised FTA, that number is expected to nearly double. In fact, exports from India to UK are projected to touch 2.5 billion US dollars, while the bilateral trade in the sector could climb to as much as $6 billion in just the next 2 years. So what does this mean for India's jewelers? And what are the emerging demand trends looking like in the domestic market? To decode this and more, we are now joined by Mr. Nitin Kedia, National Secretary at All India Jewelers and Goldsmith Federation. Sir, thank you so much for taking your time out and joining us here on ET Now. We'll talk about demand trends in just a bit, but before that, let's talk about the deal that was signed between India and UK, and that perhaps is likely to boost bilateral trade, especially in this space, to $6 billion. That's double of what we are doing currently over the next 2 years. What does your assessment suggest, and what is the on-ground situation? Have several deals already been signed in order to take advantage of this India-UK FTA?
Good afternoon, Ashish. People are just looking into it, and they are trying to find out the opportunities and try to explore the UK market first before going into the deal. And as you said correctly, that as of now we are exporting around $941 million of jewelry to UK, and within 3 years we are expecting it to increase to $2.5 billion. As of now, UK market size for gems and jewelry is around $3 billion. And in next 3 years, we expect that the 80% of this will be commanded by India. For us, it's a win-win situation, apart from one part of the deal, which says that in next 10 years, silver will be imported duty-free from the UK, and every year 0.6% duty will be decreased. So in that case, it will be difficult for the Indian refineries to operate, and for the importers, those who are importing through the bank. Ashisha.
Okay, and Mr. Kedia, if you can tell us which segment is likely to be benefited the most on account of this deal. Is it the polished natural diamond segment, lab-grown diamond segment, studded jewelry segment? Which segment will benefit the most?
See, whatever we have started, I think that the studded jewelry and the lab-grown diamond is going to get most of the attractions there. And also we are confident that the platinum jewelry, which as of now has got a very less part of the cake, that is also going to make traction in the UK, because there's a lot of demand of platinum jewelry in the UK. So we are very hopeful that due to this, the platinum demand is also going to grow.
Okay, so demand is likely to surge going forward. I believe UK is not a big market as of now, and perhaps United States is the biggest buyer of Indian jewelry. If you can tell us how are demand trends emerging on the global front, especially because India-US trade deal perhaps could be signed over the next few days. So how are demand trends both in UK and US as of now?
Ashisha, as of now, the rising prices have impacted the demands everywhere in the world, whether it is the US, UK, or India, China. We are seeing that the demand is slowing in China. Last week, we saw that the jewelry demand was slowed by 3.5%. And US also, we are expecting that it will be slowed down by the 3% or 4%. So that is to be there, but we are very hopeful that a fruitful deal of India-US for jewelry sector will get the benefit out of that deal.
Okay, so you're expecting some kind of positive benefit out of the India-US deal that is likely to be signed over the next few days, and also because UK deal that was signed last week. But back home in India as well, gold prices continue to hover near that 1 lakh rupee per 10-gram mark. How has demand in the domestic market been, and are buyers waiting on the sidelines in anticipation of fallen prices, or is the demand steady?
See, after Devshani Ekadashi, the marriage season is about to now start in November. So that demand has completely gone from the market. And also July and August are the month where we see that the B2C demand is generally low and B2B demand generally grows. And on 31st, GJPC has organized one IIJS exhibition in which around 50,000 jewelers have already registered. So that means that from the ground, jewelers are getting a very positive feedback that this festive season is going to be great, provided prices stay below 1 lakh 2,000 per 10 gram or 1 lakh 3,000 per 10 gram. If that happens, then we are expecting in value terms that will be touching last year's sales. Maybe it will be a flat for this year. We may not see much growth coming due to high prices.
Value terms, I understand it will make up for the rise in prices, but what about volume terms? Because on a year-to-date basis, gold prices on MCX have risen by about 28-29% YTD. Wedding season, which as you mentioned will commence in the next few months, what kind of impact in volume terms do you expect on demand?
I'll give you the example of volume terms that last year I gifted, let's say, 20-gram chain to my wife, but in value terms it was around 1 lakh, 1 lakh 5,000. So if this year she's asking, I'm giving her 1 lakh rupees the same. But this year, what will happen that the size or volume of that chain will come down by 50%. So it's happening across the area, and everywhere we are seeing that people come with pocket. They don't come in a shop with a mind that they are going to buy 20 gram or 30 gram, which used to happen 10 years back. People come in the shop and they have a budget of, let's say, 1 lakh to 5 lakh or 2 lakh, depending upon their purchasing capacity. So definitely in volume terms, we may see around 7 to 8% downfall this year.
That's as far as demand trends are concerned, and perhaps we are expecting strong demand over the next few months as the marriage season begins. Thanks so much for taking your time out, Mr. Kedia, and joining us here on ET Now and helping us understand what the outlook is for gold prices and demand going forward, not only in the global market but in the domestic market as well. But shifting focus to our next segment, did you know? And let's turn the spotlight on copper today, a humble metal that's now at the center of global trade tensions. US President Donald Trump rattled the copper market last month after proposing tariffs on one of the world's most crucial commodities. But why does copper matter so much? Well, copper is everywhere. From the wiring in your home to the rivets on your jeans, nearly half of all copper produced ends up in buildings, used in electrical wiring, water pipes, HVAC systems, and more. It is also deeply embedded in the transportation sector. Whether it is cars, ships, planes, or trains, they all run on copper. In fact, copper is so vital to the global economy that it is often dubbed as Dr. Copper, a metal with a PhD in economics, because its demand is a barometer of economic health. And with Trump's tariff talks sparking fresh uncertainty, all eyes are now on how this red metal will shape trade, industry, and inflation going forward.